Hey guys, how's it going? And thanks for coming. I'm Nick, and this is Real Life Money, where we talk about real life and money, because you know schools aren't, so let's get started. So this is another stock market weekly recap, guys. If you've been following us, welcome back. And if you haven't, what we do is we look at the previous week in the stock market to see what's going on, popular news stories, some individual stocks, couple mutual funds. So let's get into it. Hopefully you guys had a great week. This is the week of December 18th, 2017. Very close to the end of the year, guys. Merry Christmas. It's coming up. If you celebrate it, Happy Hanukkah and all those holidays going on. Now the markets were very interesting, so let's get into it with the Dow Jones. So this week you could see it was kind of all over the place, and the main point what I was definitely looking at was the tax reform. But you can see for this week it is up 0.42%. The next one we got going on, S&P 500. You can see they went up a little bit less than the Dow of 0.28%. And of course the NASDAQ, they closed at 0.34%. Now those were the indexes, guys. The tax reform was going on, so we'll be going into that in a minute or two. But we also got to look at Bitcoin. That's the new thing that we're looking at as well. We can see here, this is the week that Bitcoin has went through. When I was taking this picture, it was December 23rd, but you could see that it is starting to go down actually. Earlier in the week, you could see it was trying to hit that $20,000 mark. Then it actually dropped very heavily. You could see I kind of highlighted it over there. It actually broke below 12,000, and it is slowly starting to rebound right now, kind of mid 15,000s. Now you cannot deny the fact, guys, that Bitcoin is extremely volatile, whether you believe in it or if you don't believe in it. It is very up and down very, very quickly. So that's what's going on. Could this be the start of Bitcoin's crash? I mean, it is definitely hugely down since what we were looking at before. For this week, it's down just 20%, which is huge, but can it go lower? Now some of you guys might know, but I do have another video talking about Bitcoin's crash. Can it actually happen? Of another video of the stock market crash as well. But could this be it? The thing is, I think it's kind of just going to rebound at this point. Whatever caused this, I might have heard that the creator or some big guy, obviously, was selling off his position in Bitcoin. So that's causing some panic. Some new investors are scared of seeing this go down, so they're going down. So more selling creates more selling, so that's why it's happening. But for the people who really believe in it for the long term, I see it rebounding, especially for the short term. Then from there, it might even hit new highs, and then it might even crash from there. But of course, we're gonna have to see. Now again, guys, I'm no investor in Bitcoin. I probably never will invest in Bitcoin. I'm not saying that it's a good or bad investment for the future. Just please do your research before investing in them. So anyway, tax reform, guys. Tax reform was going on for this week. They were starting to sign on it, talking about the details, and Trump finally signed it, so it's happening. The corporate tax rate is decreasing. First time any tax reform, I believe they said in like 30 years. So they are dropping the 35% to 20%. I think technically it might be 21%, but that's a really big drop, especially for businesses. So businesses are definitely going to get a chunk load more of money for the future just because of this tax break. Now, if you believe in trickle-down economics, which if you give businesses more money, they're going to, it's kind of going to trickle down to the smaller guys. So, could that happen? In theory, it does. In reality, it might be a little different. So, of course, we're going to have to see what happens, but you cannot deny the fact that businesses are going to have more money because of this. Now, does this mean that in 2018 stocks are going to do phenomenal just due to the tax breaks. Obviously, that's a huge tax cut. Businesses are going to have more money. So is their stock going to perform just as well? Not necessarily. I personally believe that a lot of investors kind of foresaw this happening, so to some extent, at least in my opinion, I think the market has already calculated some of these gains for this year, or in this year at least, 2017. But I believe in that, as well as that there could be other things going on as well. For example, something with maybe the Federal Reserve, some economic problem. So could a correction happen? Maybe. But basically just the idea of lowering taxes, that's not going to automatically boost the market. But to be completely honest, I have no negative thoughts in the long term, of course. Short term, no one really knows, but I'm still going to be investing into the stock market. It should be pretty solid. Now, I know a bunch of news and everyone's kind of talking about this, saying that there's going to be a $1.2 trillion deficit because of this. I personally looked at the actual tax brackets, and it looks like most, if not all, tax brackets are actually slightly less. I looked at a bunch of them, and they dropped by around 3%. Now, obviously, that's not going to the government, but then normal people are going to have slightly more, not might change like drastically. It's probably going to be a few bucks, but I believe if people are going to have more money because of a tax break, they're going to spend that money, so it's actually going back into the economy. So it might actually work a little bit. So if you guys want, let me know your thoughts on this. I would definitely be open to see what you think of the actual tax breaks. So that's the tax reform. Let's go into individual stocks. Finally, starting off with Apple, closing at 175. They were up 0.6%. Kind of want to move it along, guys, just to make it a little shorter for you. But this is Disney. They closed at 108.67. Star Wars movies finally out. However, they were declining. Actually, not. It was kind of bad this week, of 2.34% in the negative. Of course, moving on to our tech plays with Facebook. They closed at 177.20. They were down 1.65%. And the next tech play of Google. Google closed at 10.60.12. A little bit down of 0.38% this week. And the last individual stock that we normally look at, of course, is Starbucks. Starbucks closed at 57.30, down this week of 1.7%. So those were the individual stocks. Let's look at the mutual fund that we look at, Fidelity Contra Fund. You can see that, of course, for this month, this is the 1 month chart, they got hit. And I think just because the end of the year, people are taking profits and moving things around in their portfolio. But for this week, they were actually down 0.65%. So I wanted to go through those quickly, guys, because this is the 20th weekly recap that we have going on in this channel. So every 5 increments or intervals or whatever you want to call them, I want to show you the return you would have had on these stocks if you invested in them 20 weeks ago. So let me show you what kind of money we could have made. So I'm just going to read it off the list I have here, guys. But if you invested in Apple 20 weeks ago, when we first started this little series we have going on the channel, Apple returned 12% in 20 weeks. Pretty solid, right? Disney, kind of flat, I know, but 0.91%. They are starting to rebound, so we're going to have to keep an eye on with them. Facebook increased 4.47%. Google was actually the top performer of any type of investment that we look at. Google returned a 14% in the past 20 weeks. Starbucks returned 3.35%. Those were the individual stocks, and let's look at the mutual funds or index funds that we have. The Fidelity Contra Fund, which is a mutual fund, they returned a 3.31%, in the 20 weeks. The S&P 500, the index, returned 8.12%, and the small cap, instead of these large companies that we normally look at, for the small cap has smaller companies, a little bit more risky, but for the long term, they should do well. They returned in 20 weeks 7.43%. So very interesting numbers, guys. So first, let's kind of see what's going on if we invested like this. First, let's look at the actual individual stocks. The top performers for those was Google at 14% and Apple at 12%. Now, the interesting thing is, and what I usually recommend for a lot of beginners, especially for long term, if you do monthly contributions, is instead of choosing an individual stock, choose an index fund. And you can see the index fund actually outperformed most of these investments with just over 8%. So index funds are usually boring just because it mirrors the market, but you can see, instead of choosing an individual stock, if you chose just an index fund, it actually does better than most of the investments that we had, at least. That is why I always recommend it. If you're not interested in doing research or analyzing individual stocks, or simply not interested, right? You just want to grow your money, put it in an index fund. It grows very well, especially because it's expense ratio. You're not paying huge expenses for a mutual fund when it's just mirroring the market. So that's what's going on with the market, guys. Ending the year very soon. This year's been very awesome. So continue to invest in 2018, especially if you have that long-term horizon going on. Just in case it does correct, it might happen next year, could happen the year after. We'll have to see, because we are in a very, very long bull market. So if there's a pullback happening, of course, I'll let you guys know in these recaps. But I would encourage a pullback. I would love that. So if you guys have any questions, comments, concerns, please leave them down below about whatever. You want to talk about Bitcoin, the tax reform, go for it. So that's all I got. And don't forget to subscribe to my channel, Real Life Money, where we talk about real life and money, because not many people are. So thank you so much for watching, and I'll see you in the next one.